Hello everybody, hope that you are doing very well and welcome to this evening's Contenders live stream, which is the 15th of the 7th, 15th of July 2020, and stream number 59. And today is going to be another really good one, so I hope that you are ready for this one. Get your notepads and notepads ready. Get your notepads and pens ready, because I do feel this one is going to be one where you are going to be wanting to make lots of notes, as we're covering a new topic tonight, which is still related to our volume, but nevertheless there were new topics tonight with new information. So. I hope that you're looking forward to this one. I thoroughly am, and let's get straight into it. So. Starting off, the trade disclaimer, as always, just an important legal disclaimer. Obviously, as always, no financial advice, educational stream only tonight. If you want to make sure you pause and read through all that so you fully understand, and we can then begin with the live stream. So, let me just do this a second, and let's go then. So, the Contenders live stream tonight. This is the order of content that I want to go through. So starting off with Raven chart of the week, and it's a really nice chart of the week actually, because we're right at the entry at the moment, so it's a live kind of example. Then I want to be moving on to the daily opens, and this includes our initial balances, our daily opens, the different open types that we can have. The reason I was adding this one in today is because last week I was obviously talking about adding in the daily open to the daily sheet. And there's obviously a whole strategy behind this, of how you trade the daily opens. That's what I'm covering tonight, the daily opens, and that strategy that you get from how that day opens. Okay, and then we're going to end with the questions. So as I said, I've said in last week's stream, it's likely that you're going to have questions from this stream, but I do recommend that you, put this live stream on full screen, block out all distractions, turn off every other chart. Give your full attention to the stream. Turn off social media, everything for 1 hour. Give your full attention to the stream, okay? And I also recommend you watch this in full screen so you don't get distracted by questions at, to the right-hand side of YouTube. So, put this in full screen. If you have a question, write it down on a bit of paper and, ask your question towards the end, because there's a high possibility that I might answer your question as we go along. And that way you're not getting distracted by typing it out. But if you really have the question that you don't want to forget, write it on a bit of paper and let us know, and I'll be definitely answering all those questions at the end of the stream for you. So, with that said, that's the order of content, and let's start with Ravencoin. Okay, so Ravencoin over on Binance is a coin that has already traded this one very successfully, and this is I've said it before, recognize the range before it even forms, and this definitely was recognized before it even formed. Originally getting in off that 206, which was obviously the monthly, and from that, this was a setup that I gave in the Champions live stream on Sunday, and that was literally the exact same as I had here, which was entry of the daily, target the daily, and that moved instantly, like sort of the entry to target in the same day. So that was already one setup that we had off of this. As you can see, it did overshoot the target that I gave on Sunday, which is a good thing, and we ended up hitting the weekly, and that's where it rejected. And from there, we've come all the way back down to this daily. We've actually gone slightly through it. Okay, we have gone through this level, but we're at that level right now. So, excuse me. That's I'm going to talk you through this in a second. But basically, it's Ravencoin. Okay, long entry off of the range low. Okay, take profit, range high. Really simply, this is a range-bound trade, and the invalidation is if we go back below the resistance/support flip, which we are slightly doing at the moment. But this is the chart, so you can see what it looks like in real time. So, okay, obviously had that monthly 206 sats, we have the weekly 203 sats, an old daily, which I will explain to you, 225 sats, okay, a daily 248 sats, and then obviously the weekly that held you down there, 259 sats. So those are the levels you can check on your own charts to make sure you got them correct. And, now moving into the analysis that we have here, I will show you this daily level because, it's obviously an interesting one because of the fact they're from so long ago. And many, the majority of the time I do not keep my daily levels on for so long. An old daily level like this, it's very rare for me to keep it on now, for example. I would generally have removed this by now. But because of the fact I can remember trading Ravencoin earlier in the year from this exact range, I already knew that it was a really nice range back here, so there was no need for me to think that it wouldn't work again, okay, because we were back then, started out that daily and we got those lovely rotations, okay, And from there, we obviously lost this. We got the back test of that daily, trying to break through, failed. Back test of the daily, okay, got through it with a full rotation up to the daily, come back down, held it as resistance, come back down for another day, come back up, there's the daily, back down to the daily, okay. Obviously, a few times we've overshot this and hit the weekly. Sometimes we've undershot it and we've, failed to reach that higher daily. But nevertheless, this is a really, really well-defined range, okay, with your lowest support being at around 200 sats. So you got three, in my opinion, there's three massively key levels on this range that we're trading. That's 200 sats, okay, for a very low support. Then you have almost the middle of this range, which has been very influential, 225 sats. And then you have the high of this range, which is 248 sats, okay. This was all defined by the first daily close here and then the daily close, which really gave us our high and low of the range, okay. And from there, with these are big swings, big swings from the low to the high, and to get that one on, to get that move to there was obviously brilliant, and moved up very rapidly. But in the end, we've said it before, what goes up really fast comes down just as fast, and that's exactly what happened here on Raven Coin. Went up really fast and it came down really fast. So you've now got a second opportunity, because I know even though I gave that on Sunday, I know some people missed it, because obviously it did go pretty fast from the entry to the target. So some people missed that, and then this is like now almost a second opportunity. So you can see what I've got lined up here, okay. So my stop loss, I've kind of just put this here for, I've not actually got my stop loss here, okay, but I've just put this here because I have to place it somewhere. It doesn't let me just put no stop loss, But basically, I wouldn't really say this is so much of an invalidation. Really, the invalidation is for me, because you don't really want to, it doesn't really make so much sense to have a stop loss on a CC, does it? This is still support. As you can see here on the 15-minute chart, we actually come down 618, 618, 618, 618. Get a little bounce off of that. That itself is nearly 2%. That's could have traded just off that 618 and made a good trade. So the way I'm actually doing this is splitting up orders. Daily 618 CC, and my final order is actually at the low there, which is around 212, 210. So I'm the way, this is the way that I like to trade it. Okay, a little bit more of a laddered in strategy. Okay, this is some when I'm trading seriously and when I'm trading properly, I very, 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 very rarely will do one entry. I like to ladder in and out of my positions, okay? So that would be one entry, two entry, three entries, and then, for me anyway, the fourth entry down at these lows, which is also very close to the 786 Fibonacci level. So it's not like I'm always trying to time the exact low, but if we can get a nice average entry, obviously if I got filled on these 4 entries and I actually have it weighted, but nevertheless it's going to give me an average at around 220, So I'm going to average out around this if I get all my fills. If I do not get all my fills, that's more than fine by me. And the way that I like to manage this, let's say if this was the low, 222, possible. I do not think it's likely, if I'm honest. I do feel as if we're going to come back down again, but let's just say it is the low, 222 here. Well, then what I will do is, if my other entries do not get filled, then what I like to do is add them on as there's a sign of strength. So let's say we get a bounce and we do something like this. Well, then I will look to add on at this point, I would cancel these lower orders, because there's no point in me having the lower orders if it doesn't look like they're being hit anymore. And I'd cancel those lower orders and add that position size up higher. And then obviously, instead of having that 220 sort of average, then I'd have an average of maybe 227 sort of thing, And so I get the higher average entry, but it's proved to me that it wants to move up. It's shown a sign of strength. And this is generally the way that you want to be trading. Okay, if you are aggressive, then you go for that averaged laddered in entry. If you are more conservative, then you wait for the sign of strength and then you add on higher, because there's always this conflicting sort of signs, isn't it, or different perspectives. Are you better off laddering in as something moves down, or actually are you better off laddering in as something moves up? You have to think to yourself, different styles of trading, different opinions, and there's never a right and a wrong answer necessarily in trading. Obviously, there's people that make money and there's people that lose money, but between aggressive and conservative, there's no right or wrong answer. And so there are definitely times where you are not better off laddering into a position, because you are essentially laddering into a losing position. Of course, we're trading this with a plan. It's not like we're adding onto it randomly, but nevertheless, you are adding to something that's going down. Whereas if you add on to something that's actually moving up, well, then you are trading with the strength rather than trading, expecting the bounce. You are trading the bounce as it occurs. So there's no right or wrong answer necessarily between those two methods. I think if you have your plan, then you got to trade your plan. But sorry, I've got a really bad cough. But I do think you just got to, originally put in the plan, think to yourself, do I want to add as this is going down because I view a good opportunity, or do you want to say to yourself, do I want to essentially wait for a bounce to occur and then add on to that strength? And this is the thing for me. It's a little bit confusing because I'm obviously going for the range trade here. Okay, so my original idea is trading this range. Okay, so I'm looking for this sort of thing. Okay, maybe that does extend to the weekly, but I'm basically looking for a range. And Raven coin I know is a nice ranging coin. We've seen it. Ranges for a long time. So with this range ongoing, that's still my thought process, but with a little bit of a deviation possibility. So the reason why I'm adding down onto here is because many times, just as you had this deviation from the high, it's really quite normal to see deviations to the lows. So it's not like instantly this is the line in the sand 448 and this is 222 like it has to be hit there. No, you get obviously the moves above it slightly, you get the moves below it slightly. So obviously, if this did continue to edge down like this, that's where I'd want to start to see some divergences form. Okay, I'd want to see those divergences form. And, if we don't really get anything like that, let's say that we continue to move down, we hit 219 sats, and we hit 219 sats with no divergences forming, we start to see increases in bearish sell volume, or then I'd probably just close it for a loss, and I wouldn't actually bother adding in at 212 sats, and I'd say to myself, that's not what I wanted to see. It doesn't look like a deviation, but it actually looks like we're probably going to come down and retest, 26230 sats. Okay, so there's obviously a mythology to my madness on this trade where, although I'm trading the range, there's ways that I can look for strength, there's ways that I can look to ladder, and there's ways that I can kind of trade a deviation before it's happened. And then there's a way of recognizing, okay, this is not a deviation, it's actually a full-on loss of the range and we're heading down lower. And if that's the case, I don't want to continue laddering into this. I want to get out of it, sort of thing, early, take a loss, obviously, but a smaller loss. You don't always have to hold these things to stop loss. You can get out early when there's a reason to. So that's basically the setup that I'm looking for here on Ravencoin, which I personally think is a well-defined setup. Again, already traded that, already had that from one full whole rotation of this range. So yeah, already done it once, and I'm looking to do it again. Basically, trade the range before it forms, trade the range before it even becomes a thing. That's essentially what I'm doing here. So moving back over to the stream then of today. So that's the Ravencoin chart of the week. It's not too difficult, fairly simple concept. And we'll have to see how that progresses, because literally it's at that region sort of now. I guess I would say this, that for this to be a successful setup, it is that somewhat always, it's always like this with altcoins, it is somewhat dependent on Bitcoin. If we get a massive move on Bitcoin, which at the moment is not moving massively, still 9,200, but if we get a massive move on Bitcoin, then obviously I'm going to get stopped out of Ravencoin. There's no shadow, there's no doubt in my mind that I will get stopped out of Ravencoin if there's a massive move. So I'm prepared for that, but there's no reason, I guess, necessarily to think there's a massive move coming tonight on Ravencoin sort of thing. So trading the coin for what it is, trading the setup for what it is. That's Ravencoin. So moving on to the focus of today, and that is daily opens. There are many ways to trade daily opens. Let's say that the way that you can trade daily opens, I think, is, for me, it's more of a reaction off of how the daily open occurs. Okay, so there's a few different strategies that I'm going to be sharing with you tonight, and it's dependent of how really how that opening hour goes of the daily open. So this is going to open to you 3 new strategies tonight that you can be using to implement in your daily your daily routine. Maybe obviously the daily open is quite late, it's not for everybody to trade, and I understand that. So if you do sleep at 10 p.m, then you're not going to be awake for the daily opens, but you can still use this information when you wake up in the morning, let's say, to react off of what's happened and make informed trading decisions, basically. So daily opens, I'm going to be going through how I trade the daily open, which is essentially what we're going to be going through today. How we trade the daily opens. So what are we looking for in this daily open? What we're going to be doing is monitoring the first hour of the daily open. The first hour of the daily open is a really, really, really important time. This theory does come from the stock market. So this theory is stock market theory. Obviously, the first hour of the stock market is very influential because you've gone through a period where people haven't been able to trade. But I still really like trading the daily opens on cryptocurrency, and there are going to be people that say it doesn't matter on crypto, but I am here to tell you that is incorrect, and the daily open is actually really, really, really strong trades to take. So if you are awake for the daily open, it's not even a matter that you have to be there for it, but to recognize and see what's happened and the setup that has been presented to you from that first hour of trading is extremely invaluable. So you should be looking at this every single day, whether you're up for the daily open and trading it, or whether you are asleep during it, waking up the next day, to understand what's happened in that daily open. And I'm going to be going through the 3 different open types that we have today, is of utmost importance and crucial to the day ahead, okay, for the rest of your trading day. Okay, so we're going to be obviously starting off by just monitoring what happens during the first hour, okay, or if you've been asleep for this period, go back and just review what happened during that first hour of trading. Okay, what you're going to be wanting to say to yourself is has it had a strong move up? Okay, is that first hour of trading had a lot of volume? Has it been a strong, trending move, or have we really, just gone sideways? Has it not really done anything? Okay, this is very, very easy to tell. Everybody can sort of tell this information, but nevertheless, this is what you're going to be wanting to start to review to yourself. What happened in that first hour? What happened in that first hour of the daily open? Are things that you're going to be obviously be wanting to say of what's under the term strong here? The volume that happened on the daily open, the dollar amount that it moved on the daily open. Where was that daily open? Were we opening within the previous day's value area? Were we opening above value? Okay, were we opening below value? This is some massively crucial information to be aware of. Let's say that we're, at the moment in Bitcoin, we're in a 4 days sideways range. Really low volume, really nice range trading. And so obviously what you can do is make composites of these ranges, and just to be aware of where you are opening within that range is already going to be beneficial. If you're opening up near the high of the range and there's no conviction at the open, then you are naturally just going to expect that to continue to range bound, stay in a range. So to recognize the strength that's happening off of that daily open is another thing you're going to be wanting to be aware of. So what you then can be looking to do is obviously you can be looking to trade retests of the daily open or trading with continued strength. Okay, so by continued strength, I mean is if that daily open gets a really nice forceful move with volume, then you're expecting that strength to continue throughout the day. But if you get the sort of meandering move, okay, the really slow move with no conviction, well, then you're generally going to be looking to test either the open itself or more likely a reference level around that open to get that volume injection and to actually decipher what's going to be happening next. So the daily open is inside of the initial balance. The initial balance here. So sorry, I'm just looking at that and I'm like, I've made a spelling mistake here, but I'm going to continue. So the initial balance. So the initial balance is the first hour of the trading day. So within that daily open, let me explain this. I don't want to lose anybody. The initial balance is the first hour of the trading day. Okay, so really, really simply, the way that we get our strategies, which I'm going to be covering during this stream, the way that we get our strategies are formed from the initial balance, and this is the first hour of the trading day. The first hour of the trading day is called the initial balance. That is what's starting off your balance for the day, essentially. So the name is coming from that. Okay, the daily open is at midnight UTC time. So wherever you are in the world, okay, doesn't matter where you are in the world, you are going to have to convert this to your time zone, essentially. So it's always, everybody has the same daily open. Doesn't matter whether you're in Tokyo or whether you're in North America. Everyone has the same daily open time set by the exchange of midnight UTC. So you can actually put this on TradingView or if you want to do these sort of things manually, then you just have to go across and look at a time zone calculator, I suppose. But it's always the midnight UTC time, okay? And obviously crypto is a 24-hour market, and so the key levels and the strategies that I'm going to be going through tonight sometimes can take a little bit longer to be tested. Let's just say it like that. That will make sense, I hope, by the end of the stream. Okay. So it might be a little bit confusing as we're speaking, but then it doesn't require me to get to the end of the stream for this to make sense. It's probably a stream that you are going to have to watch a few times over. So the initial balance then, this is key information. So how can we use this information to really predict what's going to be happening in the day ahead? Okay, so from this first hour of trading, we can almost predict what's going to be happening in the next 23 hours of trading, which is obviously massive, crucial information. So you have different open types, and this is determined by the initial balance. So the first hour of trading, I'm going to be going through the 3 open types that I like to trade. There are actually 5 different open types, and so the other 2 open types I can do, it's not going to be in the immediate term, but just know there are actually 5 open types. But for me, the 3 types are the most important I'm going over tonight. Okay, and we're going to be starting with the open drive. Okay, so open drive, this is one of the 3 day types that we're covering tonight. The open drive is when price opens out. I've put this in bracket because it's not actually so important. It's just a better setup if you do this. So obviously what I mean by opening outside of value area, it's like when we had that CVV setup, you know how you had your previous day's range and then the daily open is above that previous range. This is more conviction, because what we can say is if you are range bound and then going into the end of the day, the start of the new day, you've opened up outside of value, and upon that open there was a lot of volume coming in. Okay, it's just a better setup than if you open within value, okay, and then you get the push up. So both of them are absolutely valid. I've just put this in brackets because this is a preferred open. If you open outside of value, then that is preferred for an open drive, but it's just not a requirement. It's just a preference. Okay, so the open drive is when you open outside of value, and I've got examples of this coming up, so don't worry. But basically, the open drive is when you open out, when you get an initial drive, okay, off of the open. So you get a very strong and impulsive move as soon as the daily open occurs, okay, and that is backed with volume. And when this happens, you get a strong open which is backed by volume. You expect like a trending day. It's not something that you would expect to fizzle out and reverse. So by recognizing the open, okay, by recognizing that you've had a really strong impulsive move, what we like to say is the higher term time frame trader here has taken the initiative and is moving price in a direction. And if a trader has taken the initiative and it's backed by a lot of volume, then it's unlikely to say that that's then going to fizzle around shortly and turn around. So your first open type is the open drive. So your second open type is going to be the open test drive. So the difference between the open drive and the open test drive is obviously the open drive started really impulsive with volume coming in straight away. The open test drive is going to be starting off very slowly. So the open test drive, it starts off very, very slowly, and you kind of get that meandering price action that happens. Okay, until it kind of is, I've got the examples coming up, but you're going to kind of meander around on the daily open, get maybe little decline, little rise in price, but before you come and you retest that daily open, and that's where you get the injection of volume. Okay, and let's say the open is $9,000, you drop to $8,900, and then you come back up and you retest 9,000. It could be that you retest 9,050, but that region of the daily open, okay, maybe above it there's another reference point that you're aware of, and it's when you retest that level, that's when you get the volume injection, okay, and then that is then expected to get great follow, that's then expected to be the start of the move, and that is what you call an open test drive. So you have the open drive where the volume's coming in, very initiative price action. You've got the open test drive, which is starting off slow. It then is going to lose the level and you retest the daily open, and that's where you get the moves. And I think this is the most talked about one in the cryptocurrency market. This because it happens quite a lot. You do see the open test drive quite a lot in cryptocurrency. There is many times where you see the daily open retest and it you get the reaction off that level. So I would say Yeah, that's the most commonly talked of one, let's say. And then your final open type is the open rejection reverse. Okay, and the open rejection reverse is another type of daily open. Okay, and the open, it's very similar to the open test drive, okay, where you kind of lose that daily open and you retest the daily open and then you get the impulsive move. But with the open rejection reverse is basically the market is going to open at a level, okay, so it's going to be opening at a level and then it's going to come and test a quote unquote a significant key level. So let's say we're opening at 9,100, and as you know, I have at the moment a key level of 9,050. Then it might be that we are coming from that open, we're going to slowly move down to test our key level of say 9,050, which then gets that strong reverse through the level. Okay, so from the open you get that test, and from that test, that's when you instantly see that volume come in, and then you reverse through the daily open, and then all three of these is going to give you an entry trigger, and it's going to give you a stop loss and an invalidation. And I think this is the main reason why the daily open types are so helpful to myself, and that's because it does essentially give me an entry and it gives me an invalidation. And by just having those two steps from the daily open itself is some pretty valuable information, because it's giving me 2 of 3 steps needed to enter a trade. So it's giving these open types are giving entry triggers and they're giving invalidation, e.g. a stop loss. Okay, I haven't actually included this, but I just thought I might just give you a little bonus here. I don't really like to share my statistics so much, but I'll tell you this one, that in there's a high likelihood if you get a move on the open which is impulsive. This is a bonus, by the way, it's not actually related so much to but on average the crypto market, Bitcoin, is going to put in a high within the first 24 minutes of the day. So if you see an impulsive move, okay, but it's not backed by so much volume, so you're going to want, obviously the open drive is when it's backed with volume, but if you see, and this happens quite a lot, let me tell you, this happens quite a lot, so this is just a bonus tip that I'm giving you. You see that you see an impulsive move at the start of the daily open, and that move is not going to be backed by volume, and then it has a strong likelihood that the high will be put in within the first 20 minutes. Well, 24 minutes to be precise. And then within those first 24 minutes, what you'd want to see is the high to be put in within the first 24 minutes, and then that move to fizzle out, okay, and go back below the daily open, and then you have a high likelihood that was the high of the whole day. And so obviously you could, for instance, short that move, stop loss above the high of the day, and you have a little bonus tip there for you that you quite often see that. But anyway, I don't want to focus too much on that. So moving on. So the open drive. Okay, so our 3 open day types I want to be going through here. The open drive. Okay, so this is the one with the highest conviction. It's where you see the volume coming in instantly, and off of this open, it's where you expect this trending day. So you don't expect it to be a slow range bound day like we're seeing at the moment. Okay, like we're seeing at the moment, you don't really expect that so much. You are expecting off of this a trending day, so a very impulsive day. Okay, so what we are looking at here, let me hide this first bit. You can see how here we open our day. You get a very strong move off of the open. Okay, what you'd be looking at in this is obviously your volume, your delta, all your volume statistics at that daily open. When you see a daily open like this, okay, what you are saying is when the initial balance, so that first hour of trading, gives a strong push, it shows larger players are moving price, they're back with volume, they're taking the initiative, they're the higher term time frame trader in this range, and if volume backs up the move, you expect a breakout trade setup. So upon seeing this sort of initiative that's coming in at the open with a lot of volume, you would expect the day to remain, to trade, to be a trending day. So it's not something that you would look or expect really to fade. It's not something that you would expect to end with a range. It's something that you are expecting a impulsive day to occur. Okay, so off of this, how are you getting your entry triggers? How are you getting your invalidation? Okay. It's pretty nice. So what you have is, upon seeing the strength of the initial balance, again, that's the first hour of your trading. If you see that initial balance to be strong with high volume, that is giving you an entry trigger to essentially trade with that trend that's starting to happen here. The invalidation is really simple. It should not be going back above that daily open. So once you've had an initiative move away from that reference level, being the open itself, you should not be coming back and retesting this level, or especially getting above, I don't really like to use the open as a stop loss. Okay, so I wouldn't use this as a stop loss. I would use, for instance, the market structure above it. So if I was trading this initial balance, okay, here you can see the first hour of trading, and so you come to around here on your initial balance. My stop loss would not be the daily open itself. My stop loss would have to be based off of some market structure. So I might, for instance, be putting my stop loss above the highs, for an example. I wouldn't use the open itself, but the theory is that you would not test that daily open period, but I myself would be using market structure. Okay, but let's say if I'm entering, here, well, yeah, I'd probably have my stop loss at the highs, but you're best off looking for a local point in the chart. Okay, maybe you're an order block that's formed on the way down. Obviously, this is quite hard if you just one time frame all the way down. So it's obviously all dependent on context. If you are like this, one time framing, then it's pretty hard to get the entries. And obviously your stop loss is a little bit wider. If that is the case, though, then you just use a smaller position size. You don't have to miss out on the trade. You just use a smaller position size. But nevertheless, that's an open drive. Okay, so a strong initial balance, which comes with high volume. Okay, that is then going to be expecting a trending day. So you expect the rest of the day to continue. You can look to trade with the way that what's happened off of that initial balance. Okay, your stop loss, your invalidation is coming back above the daily open. It should not be doing that if you are correct in your in your analysis here that you've actually seen an impulsive move off of that day, off of that daily open. You should not be revisiting this level, and you should be looking to trade with the strength. Okay, so e.g., whether this pulls back, you get filled here at a pullback, whether you pull back up to the 618, whether you obviously can get CC setups off of this quite a lot. That's one of my favorite setups. If we do get a strong initial balance, I don't really like getting involved, as it's moving down, if I'm honest. Like I would prefer to trade it, okay, when you actually get that first pullback. Okay, so here, whether it's a foot pullback onto an order block, as you can see here, little order block, you pull back into it, you reject, or whether you get a little bit more of a pullback and you come back into like a CC, for example. There's many setups that you can do this, but you are looking to trade with that. You're looking to trade with that strength of the initial balance. You wouldn't be thinking to yourself, all right, we've just seen a really strong initial balance of volume. Let me look to now long this and long up to, I wouldn't be looking to trade this as a range. Let's just put it like that. I'll be looking to trade this very much with the trend that I expect to form for the rest of that day. Okay, so I hope that makes sense. Got another example of it here. So this is another example from a daily open, which is a strong daily open with some volume that comes in. Okay, so again, the daily open gives a strong initial balance. When you see these strong initial balances, you expect the whole, the rest of that day really to remain trending. So you really want to see that initial volume come in. So the open drive is categorized really by a lot of volume that comes in off of the open. You expect a trending day. It's, you have high conviction of the day that you are not going to be retesting up at that daily open. That's your invalidation on these setups. Okay, so whether you whether you get this trending piece like this where your entries are really, really shallow, okay, or whether you do sometimes get those higher pullback tests. And again, this is not like 100% of the time you one time frame or 100% of the time you pull back to the CC. Now, obviously, you have to use a little bit of initiative here and make an informed decision of what's the most likelihood. Like, are we expecting a little bit of a pullback before we continue? Because you are expecting that continuation, or are you looking to get in aggressively at market? There's obviously the context. You cannot just trade off of this blindly. But when you start to put this into the context of what's the previous day like, what's the range that we're trading, if we can get a combination of 5 different days into this range, like are we breaking out of a big range here? Are we there's so many ways that in lots of different contexts and confluences that you're looking for. But these are obviously tools that you would use alongside the open strategies. Okay, so your next open type that you have is going to be, what we're going to be covering here is the open test drive. So as I was saying, the open test drive is sort of when you open and you start off pretty weak in the day. So there's no real conviction that comes in at the open. Starts off very slow, very sideways. Okay, and this is the most I want to say common, but it's not the most common in terms of actual statistics, but it's the most talked about. You know, a lot of people talk about this one. Let's just put it like that. Although it doesn't occur the most out of the three, it's still the most talked about one because it's the easiest, I suppose. This is why people like this one, because it's really easy. But it doesn't happen the most. But nevertheless, the daily open, as you can see here in the example, the daily open is weak. So what I mean by weak daily open, okay, is there's no conviction off the open. This is what you're going to see, you know, for instance, in the range that we're in now. Okay, we're going sideways for the last 4 days. There's no conviction in the opens. It's really choppy trading, if we're honest. It's pretty choppy trading what we've got at the moment going on. Okay, so you can see here how you open, you get a little bit of a move, you come down through the level almost from the low to the high, you're testing like a CC, for example. You are then getting a reaction off of this, and the reaction, as you can see, is causing a lot of choppiness, a lot of wicks. There's no real conviction that's happening at the moment, is there? So the first part is categorized really, and recognized by the choppiness of the start, the start of the move. And then what you want to see to really confirm this is when you then start to move away from that open. Okay, you can see then this is really, for me, that would like confirm the test drive, when you are testing the open and then you begin to drive away impulsively from it. So this is like known as one time framing, where you really move impulsively from the level. So as you can see here, you get the open, you actually test through it a few times, but upon this test here, which is basically $1 away, so $1 away from the open, that's when you get the really big long lower wick and an impulsive move out of it. Okay, whether you had actually bought it on this test, as you can see here, you move through the level, you test the CC, you did get an impulsive move away from it, and you test the daily open there to the exact dollar. So whether you had bought on this test and you would have made a lot of money, or whether you had actually seen this move up once more, test this again, really long lower wick, okay, to $1 away from the daily open. Whether you bought on this test or this test, you made a lot of money that day, because that's a really, really nice move. So this is your open test drive. So obviously the open drive is where you impulsively move away. You do not expect a retest because that volume's coming in instantly. Whereas the open test drive is where you open, but there's no volume that comes in straight away. The volume is really weak straight away. And it's just sideways until you test a higher level. Okay. And the reason what you're thinking here is, upon the open, there's been no interest. And this happens that does happen quite a lot, being a 24-hour market of crypto. It's not always that you get a big move off of the daily open, to be honest. So it's quite often that you're not going to actually see a daily open day. It's not as influential, obviously, as the stock market in a direct comparison, but nevertheless, it's still massively important. But here you can see how you go through the level a few times, but it is the dollar. The daily open, the reaction, almost to the dollar, that's what gives you the reaction. That's when you're looking for the volume to come in, okay? And upon that volume injection is really when you get the setup. So the setup on this is, once you've got the injection, okay, you would not then be retesting the level that gave you that volume injection. Okay, so the theory behind this is really similar to how you trade order blocks and things. But once you see the volume come in, so let's say officially it's going to be off of this candle, but let's say on this candle, then when you're entering your positions, your invalidation is back below the daily open. Okay, so it's back below that test level. So again, here let's say this wicked through it slightly, because it doesn't have to be to the dollar. But if this is wick gone through it slightly, then your invalidation is whatever the low was that was made of that test. Okay, so your invalidation is the low of the test. And your entry trigger is obviously the volume injection that comes in off of that test. And then targets, again, the target for the targets for this is not, this doesn't give you a target. So you're not going to be able to say, all right, I've had the open and now I'm using a target off of this strategy. This is just an entry and an invalidation strategy. It doesn't give you a target. To recognize your targets, you're going to have to be using other forms of technical analysis. Okay, so be this Fibonacci, be this Elliott waves. You're going to have to use some other method to get a target for these trades. Oh, 1 second. Okay, so that's the open test drive. We have another example of it here. As you can see, you get an open, you test the daily open, and that's where you get the drive. So it's an open, test, drive. Okay, rather than an open drive, open, test, drive. Really, it comes in the name. And this is the example that you might recognize this example. This is the example from about 2 weeks ago. And I kept this one because it was such a nice example. And again, why was the context here? Because I honestly think that from this open, this is the candle open, you can see you do move quite impulsively initially from the open. And if I'm totally honest with you, at this moment in time, if I was, and this is why intuition, experience, and context are massively important in trading. Because if I'm totally honest with you, if I watched this stream once and had never traded before, and I started to come across to trading, then I would actually view this as an impulsive. Obviously, I haven't not including the volume in here, but let's just say there was, for the matter of an example, there was a lot of volume that come in off the open. Okay, and I've seen an impulsive move and volume coming in. I would be expecting a trending day. So again, stop loss would be placed above the high for me. So stop loss would be here. And in the end, we can say, yeah, you would have made money. But why was I not expecting on this day? This was in the live stream 2 or 3 weeks ago. As you can remember, the context here, the reason why I was not expecting this to come down and we were expecting the daily retest open is because of the context that we had just moved impulsively up out of the range. And instead of expecting an impulse break of the range straight V-shape back down, we were expecting a range to be put in here, sideways range, okay, to be put on the day to build up open interest before we got the flush, be that a flush to the upside or the downside. We were expecting a range to be put in here before a bigger move to build up the open interest, trap some more traders, and really that range before another impulse. And so the context here is, if you're only trading off of the, an open drive strategy, yeah, you made money, but you could have maximized gains by realizing that it was unlikely in the context of this setup that you were going to get an open drive. Okay, the actual context from this was much more likely that we were going to come for an open test drive, because of the fact, really simply, I was expecting a range. So this is, big emphasis that experience, and the more times you trade this, now you know that, now you are knowing the theory. The more times that you see this occur, the more confidence that you get. Okay, so having the confidence comes from this of being able to differentiate between an open drive and an open test drive. It really comes from screen time, from trading this every single day. When you're trading this every day, it kind of is just, you just get almost like a feel for it. You can kind of feel if there's going to be an open drive or whether you're actually going to get the test before the drives, And this comes from, really just the context of recognizing, are we more likely to go range bound, or are we actually more likely to range here? And that's, in this example, I remember very, very, very well. We were expecting, my words were, we were expecting the test drive, and we got the test, and then open, test, drive. So again, you get the kind of almost a weak initial balance. You're waiting for the test comes in with the volume, and that's when you move away from your level. Okay, so the third type that you have here, okay, is going to be your open rejection reversal. Okay, I'm just going to take a drink. So the open rejection reversal, again, the open rejection reversal is going to be off of a weak initial move. Okay, so your initial daily open, as you can see, it's similar to your test drive where you open really weak, but instead of retesting the open itself, you are searching to test a really key reference level. So you can see here that we're looking back at a previous day value area high. So from the open, we're searching to test a reference level, be that a value area, okay, be that like a key horizontal support, be that a Fibonacci, be that a weekly, a monthly level. We're looking for some reference level to give us a reason, one of our key levels. We're just really looking for that key level of resistance or support. Okay, and so really you get the weak open where there's no conviction, there's no volume that comes in off of the open, but what you are looking for is to test your key level, okay, and then reject with the volume, and then that's when you then get your setup. So when you come and you test your key reference level, and you would really then like to see that go through the daily open, that's when your trigger is then taken. That's now where you have an entry trigger. You have now the way I would trade this is I would always like to actually short off of my reference level. If I have a key level, then I want to trade off of my key level. I do not require this extra step of the open rejection reversal. but some people are more conservative traders, or not as confident, I suppose, where they don't like to trade their actual level they're waiting for. They want to see a little bit of evidence first. And there are times when I will wait for a little bit of evidence, so it's not a bad strategy by any means. But nevertheless, if I have a key level, then I like to trade off of it. But the open rejection reversal is that you do not trade off your key level. You wait for your key level to be tested, go through the daily open, and then your invalidation is back above that key level. So let's say in this example, you open, test your previous day value area high, you go through that value area, you go back through the daily open after rejection of that high, or then your invalidation of this setup is back above your key level, and your entry trigger is simply going through that open. Okay, the way more personal to me that I would like to trade this is actually just trading the reference level, my key level itself. If I've recognized a key level of resistance, then I'm actually going to look to trade this, getting a little bit earlier rather than waiting for the confirmation of going through the open. That's the way I would also recommend it. Really, you want to get into it a little bit early, but officially for this setup, you're going to be waiting through the daily open. And obviously when you come off of this, when you come off your key level, you do want to see the volume inject upon hitting, upon coming off of that key level. For instance, if you are range bound really low conviction off of the open, low volume, you test the level and you bounce off that level, but you have no big volume coming in, and you go through the daily open with no volume, well, you don't really have a setup on that day, because for a lot of the, for the setups, all of them really, you want to see that volume. And this is where looking at things as simple as TradingView can help. But if you can look at something like exo charts, so I'll tell you right now, I got this here, our average volume off of the last, so the average volume over the last 4 days on the 1 hour candles is currently 24.5 million. So if you are seeing your 1 hour candles that are below 24 million, you're not going to be interested in, and this is the 1 hour candle I have. So the 1 hour candle, okay, if it's below 24 million, that 1 hour candle closes less than 24, you're not interested, are you? You're not interested because it's below the average, it's even below the average volume. So what I would want to say, taking it into the context of what we got going on, is we would actually want to see, here, for example, if we're looking at average 24 million, I would want to be seeing something like 50 million at least. I'd want to be seeing something like 50 million coming in here, which is way above average, and it's giving us an actual, it looks like a form of an injection into the market. So, look at your average volumes. Okay, you can get into trades quicker when you recognize what the average is, what you're looking for, and the volume is key on all three of these setups. I just by the way, saw that we hit a CCV setup today. I'll cover that at the end of the stream, but just had a CCV. Bitcoin moving down. So yeah, that's the open rejection reversal there. Okay, so this is an example from yesterday. So this was literally last night actually. Yesterday in the day. Sorry, and we moved down. So this was the Bitcoin chart from the open. Okay, we work our way down, and as you know, you drop down to around $9,075. From the move of $9,075, I was posting in the group that it looks like we're going to come for that back test of the daily open. So our open test drive almost. So looking for the daily open to be tested. As you can see, this is the trading account here, and this section that you see, okay, this wick to move up here, as you can see, I shorted that high, okay, which was shorting around the daily open. I based this strategy again off of the context that I was expecting a range to occur, the context of we were taking the highs, and the context that we had the daily open. So three things that are coming together to tell me to trade this. As you can see, I took that trade and we come back down here, and that is coming back down to the bottom of our channel, which was obviously $9,195. So that's simply is a nice example from yesterday where make some money off of the strategy. And there's a nice example from yesterday's trades where I was waiting for that daily open, shorted the daily open, and with the same, you can see how you test it. You edge through it slightly, you take some liquidity, but it's off of the context of that open, and you test that, and that's when you get the rejection again down to the bottom of the channel. And overall, we all know we had that bigger channel really from really that high 9250 to the low 9195. Okay, and from this, by the way, you didn't end up going back up to 9250. So you kind of did test that daily open, you come back down, and then you come back through 9250, by the way. So that is an example. So what do we have here? This is a crystal ball, a trading crystal ball, of how you can now use this information off of the daily open. Okay, so what have we learned? We've obviously got the initial balance and our daily opens. So your daily open, what information are you looking at on the daily open? You're looking at the first 60 minutes of the day. Okay, that first 60 minutes of the day is what is giving you your initial balance. Okay, so that initial balance, okay, is what you are then using to predict the day type. Again, if you get that strong impulsive initial balance, if you get your open drive, then you are looking for a trending day. You are expecting a trend to occur in that day. You are not looking to fade the moves. You are not looking to remain range bound, but you are looking for a trending day. To recognize that off of 60 minutes to trade for the next 23 hours is obviously extremely helpful. Again, if you get your first 60 minutes with no volume injection, very sideways, slow, okay, then what you would either be waiting for is, I'd be waiting for one of two things. Firstly, I'd just expect a very slow range bound day, no conviction, not necessarily even expecting a reaction off of this. Okay, which is scenario number one. Scenario number two, we are waiting for the actual test of the daily open, or we are waiting for a test of our key level, and that's then when we want to see the volume injection come in. So again, this might not happen in the first 60 minutes because it's cryptocurrency. You obviously have more hours in the day than the stock market, so these tests can sometimes take a while longer than they would in the stock market. So it might not be within the first 60 minutes, let's be honest, but nevertheless, by recognizing whether you got the impulsive move off the open, whether you got the slow move off the open, whether you're looking for the test of the daily open, or whether you're waiting for a test of a key level that's close by, these steps are coming together. They're then giving you an entry trigger. They're then giving you an invalidation trigger. And obviously for the third step, the target, that's where you're going to have to incorporate some other technical analysis. But from these daily open types, you are getting a massive advantage on the competition, okay, because you are prepared, you're ready to trade the rest of the day ahead. So that's giving you a really, really big advantage. Firstly, planning your day, how you're going to be trading that day. To know whether you're going to be range bound or trending is obviously a good way, a good advantage on the market. So yeah, that's really what you get by monitoring these daily open and monitoring these initial balances, and then trading off of them. So that leads me on to the questions of today. So if you have any questions specifically about the initial balance or the day type itself, then please ask me those questions now, and I will absolutely gladly cover those questions for you. So let's see what we have. So what do we have in here? And I really, 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 I love the daily open strategy, by the way. So this for me is really massively helpful. I personally, well, this is the thing. I'm not always staying up for the daily open now. It kind of depends whether I'm tired or not. But when I always used to stay up for the daily open, and recently I am. Probably the last few weeks I've been staying up for it. But I like to actually trade in the daily open. So I'm actually in it trading, and there are times where I will fall asleep obviously and not stay up for it, but when I do stay up for it, I love to trade the daily open. That way I'm actually there reacting as it happens. Obviously it was always easier to do this in the stock market because you don't have to stay up till, well, for me now, 1 a.m. It was easier, but that's life. So let's go over these questions then. Question from JH. Hi Daniel, does the open theory also apply to the weekly open, Sunday night, or the traditional markets? No, this is different theory again. Okay, so this is specifically for the daily open. Okay, for the weekly open, Sunday night, your weekly opens, that's a different strategy again. I can do a video on that strategy, but I would trade that totally different. Okay, I would trade that different. I guess it's kind of like when we were talking about what was it the other week? I lost my mind now. I can't remember. We were talking about something the other week in a live stream, and well, for me, basically, to answer your question is no. I would trade the weekly opens differently than I trade these daily opens. Okay, so really simply, it's a different way that I would trade a weekly open than these daily opens. But yeah, the theory is the same for the traditional market. So if you trade the stock market daily opens, what I've covered tonight is the exact same theory. Okay. Adam, maybe Adam. Hello, hi Dan. What time frame do you check the daily open? Well, so if I'm awake for the daily open, which I would say on an average week, I'm probably up for it 5 out of 7 days. Then I would be trading this off of like the 3 minute chart. I like to trade 3 minute charts if I'm actually awake for it. So yeah, if I'm in the moment, it would be the 3 minute chart. If I have fallen, if I didn't make it to the daily open for whatever reason, I was asleep or tired, then I would check it the next day off of something like the 15-30 minute chart. Okay, so the 30 minute chart is your generally accepted time frame for these theories. So if I'm in the moment, 3 minute. If I'm waking up the next day, then I'd be happy to look at that for the 30 minute chart. Okay, so the 30 minute chart, looking at the volume, reviewing it off the 30 minute chart. But if I'm awake for it, which I'm more often than not, but I'll be looking at like the 3 minute chart to actually be trading it in the action. Okay. JH, how do you enter the open test drive? By limits around the daily open or later by the CC? Okay, so this is highly contextual. So it's impossible for me to say I enter this from limits as soon as it opens. I enter this from the CC. It's so context dependent because obviously every single open is different. It's really hard and impossible for me to say this is how you trade the open drive, or this is how you trade the open test drive. It's going to be so contextual because not every time I'm going to be expecting this daily open to be tested and reversed. So it is very, 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 very contextual. But yeah, I would prefer to enter this at limit orders. Okay, so the actual test drive, then yeah, I would be looking to get into limit orders, not market orders. And yeah, like for instance yesterday. So that was essentially an open test drive trade, and you could see my average entry was 9,235, and the actual open was 9,230. Okay, so I think those numbers were correct. Oh yeah, I'm on the different spreadsheet, but I think those numbers were correct. Let me just load it up because I cannot remember offhand. Yeah, 9,230. As you can see there, my average was 9,235. So around that level. Okay, so I'm not looking at it exactly, but again, the context here is that I'm approaching, the liquidity of the highs. I'm expecting a range. Okay, so yeah, I would always look to get in at limit orders, and yeah, around that sort of level is where you're looking to trade it. Okay, so Nelson, can you show these examples you use on the charts with volume and the time frame you use on the first 1 hour of the open? This is the problem. On those examples that I've given you tonight, those were ones that I've taken from the chart. Okay, I've taken that with a very, very, very clean chart. They do not have the volume on, and I honestly cannot even remember what day that I've taken those examples from. So if I'm totally honest with you, I would spend too long on this session right now trying to find those examples again. The next one that I get you, my English. The next one that I get, I'll just say in the group, right, we have the example now, go check the volume sort of thing. So I can't remember those examples that I've taken today. But nevertheless, the next time it happens, I'll just alert you to it and say, look at this for the the example. Or you can also just do it yourself, with the next time that you see. Well, I'll tell you, I'll just send you the example next time it happens, not yourself, but I'll post it in the group, So the next time we have it, and again, we're going to get another example this week. We're on Wednesday. We're very likely to get another example. So when it happens, possibly tonight, tomorrow, I'll just take a print screen and do some examples of that chart of the volume that you're looking for. But unfortunately, yeah, I can't send you back onto those examples that I've already done tonight because literally I can't remember what day I actually took them from, if I'm honest. MMP, is open rejection reversal only for short plays, or can it be for, yeah, it can be the exact same theory for longs. Yeah, 100%. It can be used for shorts or longs, 100%. In my understanding, that was all opens, they can be upwards as well as down. Yes, 100%. It's for longs and shorts. Okay, so you don't only look to trade this one way. The open drive, the open test drive, the open rejection, the reversal. This is for long plays and short plays. 100%. It's not only for shorts. I guess all my examples were shorts then tonight. I've been taking more shorts than longs recently, I suppose. Neo, can you show us how to look at the average volume on the 1 hour? Not in tonight's stream. I don't want to do it on tonight's stream. That wasn't actually planned for me to talk about that tonight, and I don't actually want to go through it on tonight's stream. It requires its own live stream to go through the averages, how you work it out. It's a bit too time consuming. But yeah, I do have this planned, and that's kind of why I don't want to cover it tonight, because I have it already planned, written out and everything. So, Nelson, when you talk about the average volume on the 1 hour candle, are you talking about the previous day volume compared to the initial balance time? I'll take this one, I suppose. It's basically, if let's just say, to keep it simple, if I'm looking at the last in the range that we're in. Okay, so I guess you can do this yourself. You're looking at the range you're in. I believe that we're in at the moment the 4-day range. Okay, so I've worked out that we're in a 4-day range. I will simply go onto the 1 hour chart, look at the volume, work out the average of the last 4 days, because I believe we're in a 4-day range. So it's pretty simple in that regards. But yeah, I'd be looking at it within the range, not past the initial balance. Okay, and that is that question. We have another sheet of questions though, so let's go over the next sheet. And that is going to bring us, I can close this one, and I'll open the next sheet that we have. Thank you, by the way, Mike. Really, really thank you. Makes it a lot easier to go through the questions. So, will you review the open when other markets open, like 8:30? Yes, absolutely. So obviously when you get the UK, so this is the thing, these strategies are more commonly used in the stock market. So yeah, the daily open, okay, obviously for the UK market and the US market, especially at the moment, the markets are highly correlated to the US and the US stock market, more so the US market. So 100% you are gonna be reviewing what happens I would be anyway. I'd be reviewing what's happening in that market open over in the stock market, because Bitcoin is basically just following. It is basically just following the stock market. As you know, this past hour, I've not looked at the stock market, but I would have a feeling that the stock market has just moved down, and that's why we've seen a Bitcoin move. That's my theory. We will test that in 2 minutes time, but my theory is that the stock market moved down. But yeah, to answer your question, 100%, I would definitely be looking at the UK market open, and then I would definitely be looking at the US market open. Okay, your 8:30, your 2:30, to see how they're opening, because firstly I could trade the stocks, but also because of the correlation between Bitcoin, it's even more important to be aware of that, even if you don't trade the stocks. Andy, is this also tradable on weekends volume wise? Yes, 100%. Definitely. You can still trade. This is the beauty of cryptocurrency. These absolutely work on the weekends. Obviously, generally speaking, the volume is a lot lower on the weekends, but this strategy is pretty nice because it's volume relative to the range that you're in. So it does not matter if you're, at the moment we're in a really low range, but on the volume can uptick on a weekend and still be higher than what it is over the last 4 days, because we're ultra low volume. So this is definitely still tradable on the weekends. There's no reason. 100% you can trade this on the weekends, this strategy. Additional questions here. Let's see. How long do you hold your position when it returns to range after a test? One of those drops looks to be the day after. Question by Sam. So again, these questions are so specific, it's really, really difficult for me to give an answer because of the nature of the question. So the question is like, how long am I holding a position after I've taken it? And it's just really, 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 it's so impossible. It's so hard to give an answer to this type of question, because you have to understand, like, every trade that I'm taking is, and I'll move this off the screen. Every question that I'm taking is different. Okay, and because every question, oops, didn't try and do that. Because every trade that I'm taking is different, it gives me a situation that it's difficult to say, well, I'm holding this for 1 hour, I'm holding this for 12 hours, I'm holding this for 23 hours, because every the way that I'm trading this is the way that I'm taking my targets are off of previous levels. So it's hard for me to say, right, I for instance short the two examples I'll give you from here. For an example, I shorted that daily open. Within 2 hours, it's already hit target. So that trade I held for 2 hours. For example, this one, you retest the daily open, okay, and then you end up falling down, the next day. So, and then again, this is off of the context. So are you expecting this to be a pivotal level, or are you expecting it to be less pivotal? So why was I taking profits at the low here? Well, because for me, the range was 9,195 to really, we can say 9,250. So if I'm expecting a range bound, and I have no reason at all to think we're going to break out of this range at the moment, Bitcoin is in the slowest range I can remember. It's just ultra, ultra, ultra slow. So not sure what just happened there. Being so ultra slow, I'm going to be very quick to take my profits. This example was obviously from a few weeks ago, where the volatility was so much higher. And so in that example, I'm going to be more likely to hold on to my positions longer. So to really answer your question of how long I'm holding it, it's just impossible for me to give like I'm holding it for 1 hour. It's hard for me to say, because every trade I take is obviously different. Okay. So yeah, hard to give a very direct answer to that. I'm sure you understand why. Another question here by Nelson. I read in a book that if price breaks through the daily open with high volume, then you can trade alongside the direction and target the percentage of the previous day move. I don't know. I'm not going to say that's incorrect. I'm just going to say that is a strategy that I do not use. So I can neither say whether that's good. I cannot say that it is wrong. I can just say that is something I have no comment on, because I simply do not trade off of that strategy. So I'm just going to say no comment to that question, I suppose. I guess if that works for you and you are using that and you are finding it successful, then, that's really good, I suppose. That's really good, because, I don't use that strategy myself. But if it's working, then, brilliant. So that is then the Raven coin done. That is talked about the daily opens. That's talked about the initial balances. That's talked about entry and stop loss triggers, invalidations. And we've done the questions. That's all the questions done. So I want to talk about the next Champions live stream. This is obviously on Sunday. So Sunday evening, normal time as always, 7:30. I think this time I'm going to want to go over some live practical examples on exo charts. I feel there's still a lot of questions about exo, so I feel as if on Sunday I'm likely going to be going through just live trades using exo charts to clear up hopefully some confusion on that. So yeah, make sure you don't miss that one on Sunday. We'll be going through that normal time, 7:30 UK, just as this one, but on Sunday. So summary, the key points from today. Measure the daily open strength. So really simply by this, we just mean looking at that daily open. How much strength has it got? Has it had a directional move from the open? Okay, has that initial balance really given you some indication of how the day's going to likely to play? Has it gone sideways? Where are you opening up? Like, where is the daily open? Like, that question period is important. Like, where was that daily open? Was it opening within previous day's value, or was it opening above previous day's value? If you open above previous day's value and get a daily drive, an open drive, then you are expecting a really big follow through, because you've just broken out. If you opened outside of the range and you've got an injection above it, that's pretty bullish. You expect a trend. Whereas if you if you open outside of the range and the volume's really, really, really low, then that's where you'd be expecting like an open rejection reversal. Okay, where you open, test a key level above you, and you reverse. Okay, so by measuring this is obviously very important. Okay, so we're then obviously also monitoring for the volume. We're waiting almost for that volume injection. By seeing the volume injection, that's really what gives us the the confidence to trade along with the move that's happening. It's giving us the confidence to enter the trade and then to know where we are wrong on that trade. The invalidation here comes from seeing that volume. And, from taking this, from measuring the strength and then monitoring that volume, it gives us the way to predict the type ahead. So, for example, we open upside of value, we get a strong initial balance with high volume. We're able to predict that we get a trending day. So we're able to trade the rest of the day off the knowledge that we can correctly predict what's actually going to happen there. Okay, so ending quote here. Understanding the open type lets us trade the next 23 hours with more conviction. Conviction can also be a synonym for confidence. So, by having the open type nailed down, by seeing the open type happen thousands of times, okay, so by having this experience locked into your brain of seeing an open thousands of times, you can then gain that knowledge and experience of trading with this without even thinking. So I'm not going to lie, I'm not there sat thinking, oh, is this an open drive? Is this an open test drive? No, the way that I would trade this is more natural almost, and not thinking of theory the whole time that I'm trading, but actually just trading because I've seen this happen thousands of times. I'm ready. I've seen this occur. It's just almost wired into my brain, I suppose. And that's how you want to get. You want to get to the level where you're not actively thinking about what the open type is, but you know what it is without thinking, and then you're trading off of it, I suppose. And that comes with time. That comes with studying, many hours of study, as well as actual screen time and trading. But that's how you then get the conviction, confidence, to take the trades, win your trades, and make some money. So basically, understanding the open type lets us trade the next 23 hours with more conviction, because you understand why you've opened, you understand where price is looking to search towards, and then that gives you the confidence to take those trades. Okay. So I said I wanted to just quickly check Bitcoin. Okay. We can see this one. Funny enough, are you surprised altcoin moved down while Bitcoin moved? No surprise at all. Okay, and I wanted to show you the CCV setup. That was it. There is the CCV setup. So, developing day, we can hide all of this. We can go into this, and you can see we opened the day here. Acceptance below the previous day's value area high. Previous day's value area low, 9165. As you can see, we reached down to 9140. That's an absolute perfect. Okay, that's an absolute perfect example of a CCV. Okay. I will show you this. I was in this and in a short at the moment, and this was after we had that acceptance back in a little bit earlier off of this rejection. I got into that short, but there's the example. Really nice example. I didn't have, as you can see, I haven't actually basically I just wanted to show you this one live on stream as it actually happened during the stream. There's another example, perfect example of a CCV playing out. Okay, opening above previous day's value, and again, the context of this was really good, wasn't it? So the context of this is this range has been going on 4 days now. There's no reason to expect a breakout. We got really clearly defined support. I mean, this midpoint is now massive resistance, and then the high of this. So what was the confluences here? Covered this in the live stream this morning, that we had the confluence of up here to CC. You then come back down, and then you are coming up here once more. Have a guess what the confluence was of this high today to CC. Are you surprised? So again, from high to low, CC confluence with the middle of the channel. Okay, I actually did not get into the short straight away, and that's because I longed this morning. So this morning, I've traded it really well, let's be honest. After like this morning saying I've done a bit of a rough patch, that's then 2 trades, 2 wins. Really nice trading. I took a long off of 919. Well, actually, my average fill in the end was like 912. But nevertheless, I longed off the bottom of the channel. Took profits literally at the very high. On that. I then saw the rejection back off of it. Another move back up, and it kind of done this little flag, and I just thought it was looking really weak, and I said to myself, you know what, This is looking for me, it's looking to me like it's acceptance back below the previous day's value area high. And my exact words this morning in the live stream were, I do think that we're going to test that value area low. But so I was aware that we had this set up, and when we started to get that acceptance back below the previous day's value area high, I was seeing that daily open was really, really strong resistance. Again, what can we do? We can see we drop down, test, drive. So what did we have today? Open, test, drive. And that's exactly what happened today. You had an open test drive with the confluence of a CCV setup. Okay, so two things coming together. And here is just a lovely example. That is from the morning, trading the long off the bottom of the channel, taking profits at literally the dollar of the high. Then switching that long into a short position, and then from that short position trading it down to the low. That is currently $450 profit. I've already done another $500 from that trade of today. Yeah, that's lovely trading. Like, that's really, really good trading, isn't it? So back on form. That's what you want to see. You want to see me giving you examples live of not only talking you through the theory on today's video, but then giving you just a perfect example, let's be honest, a perfect example of an open test drive, and then showing you the results and the money that's made behind that. So yeah, today, open test drive along with the CCV gave me that short position, and that's how it turned out. Again, this is just nice trading. So yeah, there you go. Hope that you've enjoyed this live stream and it was very beneficial to you. I do recommend that you watch it a few times over. Watch the live stream, watch the live stream, watch the live stream. Watch this 2 or 3 times, and hope that you've enjoyed. I'll catch you on Sunday, where we're going to be taking some more trades together, and enjoy. Cheers, everybody. Thank you, and goodbye. Bye.